So today we're going to talk about a very important topic, that is hidden bullish divergence. Okay, I'm going to show you what hidden bullish divergence means and how you can trade and detect the hidden bullish divergence setups on your charts. Hey guys, welcome back. So today in this video we're going to talk about hidden bullish divergence trading setups. First of all, what are hidden bullish divergences? Okay, when the market is moving in the bullish direction, the market should be forming higher highs and higher lows. Okay, because that would mean that currently the market is in bullish trend. But what happens is, if we apply an oscillator, instead of making or following the market, the oscillator would be forming the lower lows. Okay, as you can see here the market is moving in the bullish direction and there is formation of these higher highs and lower lows, but the RSI indicator here or RSI oscillator here is forming the lower lows. So there is a divergence happening here, and this is a very good strategy that you can use in order to take some profits. Okay, I'm going to show you how you can trade using this hidden bullish divergence trading setup. Now once we have detected the divergence, okay, we need to trade it, and we need to determine where should be our entry and what should be our take profit and stop loss levels. In order to do that, what we can do is, we do not know currently, because here the lower low was formed as soon as the oscillator moved below this previous lower low. Okay, so from here we don't know like how much more the market is going to go in the bearish direction, or how much the divergence is going to happen further. So for that, what we do is, in the market we look at the previous charts and previous data, and we try to find a key level, or we can also use the Fibonacci ratio on this way. What we would do is, we would draw a zone, and then once the price comes back to this zone or retraces to this zone, we would wait for the formation of a bullish candlestick pattern, bullish trend candlestick pattern. And if that pattern forms here at this key level, then we would take our entry point, and our stop loss would be below this zone, and our take profit would be above at this high, the previous high the market formed. So this is how you trade using the hidden bullish divergence trading setup. If you haven't caught up like what it means, I'm going to show you in the example right now. Okay, so let's move towards the charts. So here we can see a hidden bullish divergence setup. Let me just apply the RSI indicator. Let me just go here and tap RSI, and here we can see the RSI indicator or RSI oscillator. So let me just go to settings and hide some RSI based moving average, and also let me just increase the width of this RSI indicator. So now here we can see that currently the market is forming clear higher highs and higher lows, but here we can see that the indicator is forming, instead of following the market, the oscillator is forming a lower low. Okay, you can see a lower low here, and again you can see a formation of lower low here. Let me just draw a line here. So first you need to detect the swing points. Okay, you need to detect the swing points of your waves and the oscillator, and then you need to draw the either it is forming higher highs or higher lows and lower lows. Okay, so here you can see that this is a higher low, and this is again a higher low, which means the market is moving in the bullish trend. But in case of RSI oscillator, it is forming lower lows, which means it is not following the market, and which means there is a divergence in the market. So now let's trade this. Okay, so now, as I just discussed earlier, you can see that the oscillator broke this previous lower low at this point. Okay, so we don't know like how much divergence is going to happen, or how much more the price is going to go in the bearish direction. So what we need to do is, we need to look for key level to form, or we can also use the Fibonacci ratio. First, let me just draw the Fibonacci from this level to this level, and we can take the golden zone, that is from 50 to 61.8 of Fibonacci, and then we can draw a zone there. Okay, another thing is, I can see the formation of this demand zone here, so I would just draw this demand zone, and I would wait for market to retrace back to this demand zone, and then after that I would wait for the formation of any candlestick pattern that would mean that now the market is going to move in the bullish direction. So here you can see that the formation of an inside bar at this point, and after the formation of inside bar, what we do is we wait for the breakout. if the breakout happens in the bullish direction, that means that bullish trend is gonna continue, okay? And if the breakout happens in the bearish direction, that means now the bearish trend is gonna continue, okay? So from here we can see that the breakout happened in the bullish direction, which means now the market will move in the bullish direction. And here our take profit would be at this previous higher high which the market formed, and our stop loss would be just below the key level or the key zone that we had detected. So this is how you can use the hidden bullish divergence in a trading setup in your trading, okay? And let me just repeat what we have discussed in this video so far. First, you need to detect the swing points of your chart, okay, or of the waves, and you need to form the higher highs or higher lows. After the formation of these higher highs and higher lows, you also need to determine the swing points of your oscillator. You can also use the MACD or any other oscillator, but I would recommend you to use the RSI because it gives the best results. And in the length of the RSI, you need to put 14 because this is the optimum length that you should use. And after that, you also need to determine the swing points on your oscillator. You should not go too much deep in the detection of the swing points, and you can see the clear formation of swing points here, and you should keep it a bit simple so that it doesn't get complicated. So after doing that, you need to draw a line. As you can see here, I have drawn a line from this higher low to this higher low, and from this low low to this low low. So this is our divergence happening here. After that, we don't know how much market is gonna move, okay, diverge, okay? So for that, in order to cover up that, we detected a key level in the past, and as you can see here, I've waited for the price to reach this key level, and then after that I waited for the price to form a bullish candlestick pattern. That would mean that market is going to move in the bullish direction, and then I took the long position. I hope you guys like this video. If you have any questions, please comment down below and I would love to answer them. Also, don't forget to check the links in the description, and also don't forget to subscribe so that you'll be the first one to know whenever we upload new content. See you guys in the next video. Thank you.